After just a month since my last portfolio update, the world is still in a very strange place. Investors remain faced with a heady cocktail of super high rates of inflation, commodity prices are spiking, and central banks are now tightening their belts once again and no longer want to just print money non-stop. In terms of overall stock market performance, the major indexes have been relatively flat with some potential green shoots. The S&P 500 did have somewhat of a mini recovery rally, but it's now 1% down from the month before. However, closer to home, the old FTSE 100 is slightly bucking the trend, showing a 2% gain. This makes a whole lot of sense when you consider that our home index is made up of a lot more of those banking stocks and oil giants who get to take advantage of those higher interest rates and commodity prices. Across the wider world, the war in Ukraine still rages on. Russia's been threatening Germany and other European states with cutting off their supply of gas, which they rely on so heavily to supply and heat homes as well as businesses. Interestingly enough, Ukraine was the largest exporter in the world of seed oils, but it also had corn, wheat and iron ore as its other main exports, which was putting a huge strain on the global supply chain, which was already fragile having been damaged by the ongoing pandemic. Worth saying that Ukraine's largest trading partner in the world was actually China, as they purchased a huge amount of their goods, and this was followed by other countries including Russia before the invasion. And then, as if all of this wasn't enough to contend with, we're now seeing further lockdowns in China too. Shanghai, which is the city of 25 million people, has now been shut down for weeks, and businesses including Tesla's own Gigafactory remain shut, although some factories are seemingly allowing people to sleep inside their workplaces to keep things going. Ports are backing up too, with large container ships unable to dock to load and unload their cargo, which bear in mind will have a knock-on effect to any large US companies who wants to sell their goods back home and here around the world when they've actually got to make them in China. So with all of that said, is there actually anything that we can be optimistic about? Well, I think there is, but we're going to start to see whether things can remain positive after a big week in earnings this week, especially from companies like Netflix. We need to make sure that we see demand being quite high for discretionary services, people out spending all of their money in shops and online, and also areas like the housing market remaining pretty stable. The moment we start seeing any major declines in these areas, we might be looking at a very negative outlook for a year, and there's always plenty of people out there who will sell you that fear. However, with all of that said, if you're an investor like me who invests regularly along for a long period of time and uses low-cost index fund as your main approach, then in all honesty, who cares? With any kind of sentiment in the markets being negative, I'm personally happy just to drip feed into the market when I get spare money, with that view that I won't have to touch any of that for decades anyway. Investing in the long run into the wider stock market rather than trying to pick those individual stocks is one of the only ways to make sure you can get your fair share of the returns of the market. And in challenging times like this, it's a lot harder to suddenly have to pick any of those individual stock picks that seemingly just all went up back in 2021. In the last couple of years, so many people thought it was easy just to throw money at speculative companies and make easy money. And although there were plenty of success stories, many new investors still lost plenty of money in one of the greatest bull markets we've ever seen. So this is why I'll still be keeping with my strategy of having the core of my investments in a well-diversified broad index fund that's very low cost as well as simple to manage too. But don't worry, I'll still have plenty of fun outside of that. So I do run a number of different portfolios that include my own UK dividend stock one, a US growth one, as well as a fairly large one on Hargreaves Lansdown that's a mix of a few different areas which I've built up over the years. For now though, let's have a look at the performance of this portfolio so far this month, and let's also talk about a major change that's going to take place soon as well inside it. Right, so as you can see now, I've just pulled up my stocks and shares ISA that I've got with Vanguard at the moment, so we can see a current portfolio value here of £11,567.72p. You can see that I've got my ISA here, of course, but there is a pension as well, so we'll just talk about that in a moment. And if you're a regular watcher of the channel, you'll know that most of my portfolio is in the S&P 500, and it's specifically in VUSA, which is their largest S&P 500 ETF, which is a very low cost one too. As you can see here, the total value is £11,567.72p. We've got a current personal rate of return of 6.36%. And of course, if we just go back, things haven't been too exciting over the past couple of months. And this one, of course, was only really started back late last year in September. Don't forget, if you're enjoying the content like this, please do me a massive favor and hit the like button. It really helps out small channels like mine. But anyway, let's get back into the video. Now, let me just show you actually what's gone into the account. Of course, I do have a holding also of the FTSE Emerging Markets ETF. This one has a ticker symbol of VFEM. you can see here that what I've actually done here and what I've actually got at the moment. So we can see here in terms of performance that S&P 500 fund has been doing pretty well. I think from last time we looked at this market and last time we gave a portfolio update, I think we were even actually in the red or only up about 1 percentage point because the market had been going a little bit crazy at the start of the year and was doing pretty poorly. But actually over the time and over the longer period of time we leave this in, the S&P 500 has been doing pretty well. The only big letdown here has really been that emerging markets with VFEM. But I think over that much longer period, there is huge potential there. But unfortunately, we are actually down on that one. However, if we look at it from a total amount and total standpoint there, in the overall performance, we're only down £85 in that one because the actual purchase itself was only £1,500. And I wanted to kind of keep this perspective. I wanted to keep this kind of 85-15 split. Now, in terms of future investments into this portfolio, I think I will probably look at potentially some additional diversification. I am toying with the idea of adding in something like the FTSE 250. I do want a little bit more of that exposure to those smaller companies, especially the ones in the UK. And the reason I say that is because actually those smaller companies over much longer periods of time have tended to outperform their larger peers. Now, although they don't pay out significant dividends, I'm much more interested at my stage of wealth accumulation rather than trying to get any kinds of drawdown or any kinds of income. So watch this space, but also do let me know in the comment section below if there's anything else you might add. And of course, there's always the fallback approach and the even simpler approach of just saying, well, just have a global ETF or just have VWRL or something similar. Or even as in my last video, when I was speaking about how I'm making a global ETF using separate index funds, that I could kind of make up my own thing. But for now, I'm very, very happy with this for the time being. I'm certainly very happy to look at other options as well and expand and watch the market as things go on. Because at the end of the day, we do have to remember that the US, for example, has 60% of the equities market in the world, but only makes up about 40% of the GDP. Now, will that continue and will the US continue to outperform its GDP? Well, who knows? I mean, certainly in the short term, I think there's going to be no doubt, no betting against the US to do this, with those big global dominant companies, of course, selling outside of the US, selling internationally too. And of course, with the state the world's in, who knows which way things are going to go. Now, a big announcement, if you're not a regular viewer of the channel, that I am actually moving over a significant size of my pension over from Hargreaves Lansdown to Vanguard. Now, the account is here ready set up. I'm still waiting for that money to transfer. So there's about £40,000+ coming over, which was currently invested in an S&P 500 index fund, and then also a little bit in emerging markets too, actually in a Vanguard fund. Now, the Vanguard fund will actually move over as it is. Unfortunately, the other fund is currently sat in cash with Hargreaves Lansdown at the moment, so we are waiting for that one to come across. So as soon as that one does come across, we'll have quite a nice sizable account value overall on Vanguard. Remember, with a SIPP, that's all my old pensions coming together from all of my old workplaces. Now, of course, I can't touch that until I'm 58, so it's not in similar way to a stocks and shares ISA. There are tax benefits, but tax benefits going into it, and you can get a lump sum out of it. But I'll have to worry about that and focus on that one once we kind of get down that line in kind of 25 years time or so, being 33 at the moment. I got that wrong in my last video. Anyway, that's my portfolio update for you this month. Really, it's quite a simple portfolio, fairly straightforward. I'll probably add some money again in soon. I don't have a regular direct debit set up yet. I might have that, but depending on how things go, we'll see how we actually do that one. If you do want to see any of my portfolio updates, I will leave a link in the description, which has all of my different portfolio updates. We've got Vanguard, of course, we have Free Trade, Lightyear, one of my newest ones, and my Hargreaves Lansdown one, which I will do another update to shortly. Anyway, thanks so much for watching. If you've enjoyed the video, please drop me a massive like. Don't forget to subscribe for many more, and I will see you in the next video. But as always, I'll leave you then. Happy investing.